How can I evaluate farmland's real value? Imagine standing on a piece of land and wondering if it's worth the asking price. Determining farmland value isn't guesswork. It's a process based on facts and proven methods. When buying farmland, understanding its true worth helps you make smart decisions. The first step is to look at the land itself. How much of it is suitable for farming? Not all land is equal. Some parts might be wetlands or forests that can't be farmed. The more arable land you have, the higher its value. Next, soil quality plays a big role. Fertile soil that drains well and supports crops will boost the land's worth. Soil tests can tell you about fertility and drainage. Good soil means better crop yields and more income potential. Speaking of income, consider what the land can produce now and in the future. If it's already growing crops or raising livestock, that's a good sign. You should also estimate how much money the land can generate. This involves looking at current yields and how much you could increase production. Location is another key factor. Land near markets, good roads, and infrastructure tends to cost more. For example, farmland close to large cities or in regions with high crop productivity usually commands higher prices. Improvements like irrigation systems, fencing, or buildings can add value too. These features make farming easier and more efficient. To get a clear picture, use different valuation methods. Comparing recent sales of similar farms nearby helps you see what the market is willing to pay. This is called the sales comparison approach. The income approach looks at how much money the land can make and applies a capitalization rate to estimate value. This method is especially useful if you plan to farm the land yourself or lease it out. The cost approach is less common but useful if there are significant improvements like irrigation or structures. It estimates how much it would cost to replace those features minus depreciation. Keep in mind that market conditions and land restrictions can influence value. If there are limits on land transfer or ownership, that can reduce what you might pay. Rental arrangements also matter since farms often have varied lease agreements. Long-term trends show farmland values tend to go up over time, driven by factors like interest rates and crop prices. When buying farmland, it's wise to combine these methods and, if possible, consult a licensed appraiser familiar with agricultural real estate. They can help you understand soil health, market trends, and property specifics. Knowing these facts ensures you're paying a fair price based on the land's true worth, not just the surface appearance or asking price.